JBlog, March 14th, 2010. I came across this MarketWatch article and it's entitled Here Come the Bulls. Now is a smart time to buy stocks. And I just had to read this particular one. And basically, the author argues, mostly on technical reasons, that all of these stocks have already had a good run, and there's some other stocks that are basing and gonna go much higher from here. And well, you know where I stand on that one. Um, Last week, the market was very excited over an increase in sales, retail sales, up 0.3%. If you exclude automobiles, up 0.8%. Everybody was very excited. Sort of reminds me of new parents who just have had their first child, and now it's taking its first steps, and suddenly, oh man, this has never happened before. Our child is going to be an Olympian. He has taken a step. Winning a gold medal is just the next hurdle, right? Whatever. I have no idea why people bought things in February. I imagine they needed things. I mean, after not buying anything for a year and a half, obviously sooner or later things break. You need to replace things. You go out, you buy things. So, not that big a deal. Maybe they all bought snow shovels. No idea. There was lots of snow to shovel. Is it going to be a new trend? Is it going to be a new bull market in retail? I doubt it. I wouldn't know where that money would come from on a continuous basis. Um, then we have here another article that especially uses the word Goldilocks. I always love it when they use these Goldilocks and Nirvana terms. That's usually when you have to put on your steel helmet and get into your bunker. So, um, of course, we have another claim that job first time claims have decreased, and automatically the article jumps to the conclusion that next year, the next month, or the month after, we will see increases in jobs, and because jobs losses slowing down must obviously mean that people will be hiring left, right, and center. Never mind the fact that currently we're 12 million jobs short of what we need. And if we continue going along these lines, even if we have fantastic growth like the type that you get when you come out of recession, it would still take 7 years of full employment. Now, what are the unemployed people going to do for 7 years? What's going to happen to the houses? What's going to happen to the mortgages? Are we going to carry them for 7 years until they can finally find employment? I doubt it. Again, it's the new parent thing. Just excitement where realistically there is nothing special. Um, Another conclusion that Obama was right and the pessimists were wrong and everything is wonderful and the economy is converging with stocks. I don't know which planet he lives on, um, the writer that is, um, because again, for those who are out there struggling to make the mortgage payments and looking for a new job at the same time while having the unemployment run out on them, they're certainly not seeing any economy converging with stocks. Now, the stocks, on the other hand, look like this. So we had this drop here at the end of January, and then we bounced off of right here, and we're now about to challenge the highs. But do keep in mind that the whole picture looks like this. This is a monthly chart, 3 years, weekly chart, 3 years of the New York Composite, and as we had the drop from hell, another drop from hell, and then we had a rise. Now we are right here. Obviously, the market looks like it is flattening out at this point. So for anybody to say this is the right time to buy after a 70% rally is ludicrous. I would think that buying now is foolishness. You're chasing, maybe the last 10%, maybe even not. What I see is I see a technical non-confirmation. Again, the RSI is not achieving the highs. Even though the price is high, the RSI is not achieving the same highs. Um, we have money flow, we have OBV, they're negative. Stochastic starting to reach the top, so it can possibly run out of steam here. It's certainly an uphill struggle from here on. It's nothing easy here. The S&P 500 looks much the same. Again, on a weekly chart, the whole thing looks a lot less bullish than it does on a daily chart. Um, but it doesn't really matter because the fundamentals simply do not support what the news, CNN and CNBC is trying to sell you. It's just not there. We just have too much problems. Housing is still dropping. The properties are selling 2.8% below ask in February. Yes, there's less foreclosures. That's because A, the banks are scared to foreclose and take bad assets onto their balance sheets, because as soon as they foreclose, they have to admit that the house isn't worth as much as they say it so far. Also, the government has put in legal hurdles for banks to foreclose on houses. Even if they wanted to, it is a lot harder. 5 million homes are currently behind on their mortgage payments. Um, then there's other things, like for example the huge deficit, $221 billion deficit in I believe in February. That's insane. I mean, give me $221 billion and I'll create a few jobs too. That's not very complicated. I mean, tell me to spend some money, I'll spend some money, and there'll be companies that are willing to sell me goods for the money that I give them. That's not a rally. It's not sustainable. But the market doesn't seem to care right now. Bulls versus bear currently is 42% bulls versus 23% bears. So the bulls definitely have the upper hand, which we can see easily from the VIX. Here, once again, the VIX is at lows. It's in the 17s, which basically says everything is wonderful, Nirvana is coming, blah, blah, blah. Um, Another interesting statistic is US equity managers are down to 3.6% cash in their portfolios from 6% cash. Basically, even if they wanted to buy, they're running out of cash to buy things with. So this is a problem. While the U6 unemployment rate is still hovering at 16.8%, all of this does not add up to another bull market. Where would the money come from? And then finally, of course, the laugh is that Greece has solved its problems. They're going from a 12% deficit to a 9% deficit, and they're planning to do that on cutting um, holiday benefits of public servants, as well as increasing income taxes. Now, for most of you probably don't know, but in Greece, avoiding income taxes is a national sport. Raising the income taxes even to 100% will make no difference whatsoever because they're simply unable to collect. So from that point of view, it doesn't really matter. This is just another month of life, maybe 2 months of life, creating hope, hoping to sell some long-term bonds to make the problem go away temporarily. I mean, even with the cuts in civil servants' salaries, only holiday benefits, they basically have a revolution on their hands. And the whole country comes to a standstill. There's no airplanes, there's no mail, there's no banks, there's nothing. Nothing moves. Everyone is on strike. It's crazy. And even the support of the public is starting to waver, so even Greeks are not in support of this anymore. Final chart I'm looking at here is oil. Oil went up in this channel for quite a long time. It might have flattened out now. We'll have to see how this continues, but that is a possibility. Gasoline is going sky high. That's going to cut into margins for individuals as well as companies, while natural gas is dropping like a rock. So anyways, gotta go. That's all I have for today. Hope you have a good week and make lots of money. Bye.